morning, YouTube world. Today is Friday, February 17th. AM Chatter, episode 8. As you can see, our screen is filled with one more person today. I'm getting tongue-tied here. Welcome, guys. We have a special guest with us today, along with Anthony and Tom. We have a datologist from the car industry, Mikey Analytics. Welcome, everyone, to the show. Before we get started, let's throw it around the room. Let's give it to our guest first, coming in live from that awful city of Boston. Mikey Analytics, how you doing this morning?
I'm doing well. A little nervous. Finally got the call up to the big leagues.
I can understand. It's nerve-wracking to be on the #1 morning podcast and on the YouTube circuit. So welcome.
I've grown up watching it on TV, and to finally be a part of the show, it's humbling.
There have been rumors that you're the #1 chatterbox out there. So we're happy that you're part of our, Taylor Swift got the Swifties. I think Beyonce got the Bay Hive or the Beehive, whatever they call themselves. We got the chatterbox. So glad to see you live and in person. Tommy boy. How are you?
I'm doing great today. It's Friday, so we're all fired up for that. I had to take the wife to the airport this morning. Hopped in the car about 4:15. Got my day started early. Little known fact about this morning is at 4:15 today it was 60 degrees. So all you guys just waking up now here for the AM chatter, it dropped about 20 already for you here. So get ready for the wind chill. It's going down to the teens here later this afternoon.
Yeah, definitely a little bit chilly. I also I didn't get the memo that it was Friday Hat Day. I would say I probably have the best set of hair out of all of us here. So let me know next time, fellas. Yeah, exactly. Like I said, best set of hair on the screen. I know Anthony doesn't have the best set of hair. Good morning, sir. How you feeling? I didn't think you were going to be able to make it today.
I'm here, buddy. I am here.
That's good. Good.
Having a shaved head, it's a little less maintenance, man, so it's not that bad. I do miss a haircut. I'm not gonna lie. I do miss going to Sports Clips and getting a haircut, but it's all right.
Are you gonna have your phone go off every episode, or maybe by episode like 15, we'll get it where it doesn't go off in the middle of the episode, or what do you think?
How do you know that's mine?
I can just only imagine it's yours. That's all.
Ryan, you cut your own hair, right?
Nope, I do not. I go to the wonderful place called Sports Clips. They let me watch sports while they cut my hair. It's a genius idea. Thank you, though. Thank you for asking, Mike. Anywho, getting into the show today with everything going on out there. Before we get into the world, let's talk qualifying for a car compared to qualifying for a home. So we got our auto industry expert here, Mikey Analytics, and we'll get to him. But as the loan officers on the call, auto financing becomes the biggest headache for us most of the time when we see qualifying for a home, because people will buy cars on a whim. Maybe their car breaks down, maybe their lease is up, maybe they just want a new car, and they don't think it's that big of a deal. But anytime you add debt or change debt, it's a big deal. In the mortgage world, we focus on debt to income ratio, and that's a very big deal. To be honest, I'm not too certain how the car industry qualifies someone, and that's why we have Mr. Mike here with us. So, Michael, when we qualify someone for a house, we're looking at all of their debts compared to their income and job history. When someone comes to you guys to get qualified for a car, what's the steps you would take?
So it depends, right? So if you go to a dealer, they probably have several outlets that they could finance you, and each bank has their own specialty, their own algorithm, what have you. So some lenders may be strict DTI lenders. Other lenders may look primarily at a payment to income. So they're kind of ignoring the other debt, making sure that you can afford. They might have a 12 to 15% payment to income on this auto loan, and they don't weigh in the other debts as heavily. So it all depends on the lender. I would say that when qualifying for a car loan, there's probably a lot more flexibility. It's probably much easier to, if you are held against a strict DTI, to lower your car payment to fit that DTI than it would be to lower your monthly mortgage payment to fit a DTI. I mean, there's always, depending on the quality of the collateral, you could ask the lender maybe able to extend term a little bit. You could probably get rid of some of your ancillary products, your warranty or what have you. So if you are definitely right up against it, it's going to be easier to work with the DTI factor on an auto loan than it would be a mortgage, I would imagine.
So you're saying you look at a lot of times, or it's an option to just look at income compared to the payments, and that's what you guys look at compared to bringing in all the other debts.
Yeah, that's the bank that I work at. That's what we primarily look at. There are lenders that will have a strict DTI, but there's always options. So a dealer typically has 5 to 10 finance sources, and they all, between that, you're going to have a whole mix of criteria that they look at. So personally, what we look at is payment to income, but there are some debt to income lenders out there.
Now you bring up 5 to 10 lenders. Like us at West Penn, we have multiple investors that we can run interest rates through. A lot of people will come to me and be like, oh man, my credit score is low because I went to go buy a car and they ran my credit 10 different times. In the auto industry or in the mortgage industry, they give us, a time frame that a buyer can get their credit run multiple times, and it all counts as one time. Even though you're running it through 10 different lenders, is it the same way in the auto industry where that's only counting as one credit pull?
It is not. So when we look at someone's credit pull, we could see that in the last 4 days, they've been run at 7 different banks.
And that can count as multiple credit pulls for that buyer.
It does. Yep.
Interesting. Okay, that's very interesting. Anthony Thomas, do you have any questions for the datologist this morning?
No, I find that very interesting, actually, because we are allowed to shop around for 30 days under that same credit pool. So the buyers, I could see why they do come to us a lot of the time saying, hey, I don't want my credit pulled. It was just pulled at PNC last week. Because we are allowed to pull that. So I could see, they're shopping for that car and they're getting run 7 times. They're seeing their credit go down. I could see the fear, or where that fear actually does come from, getting that pulled. I don't really, the only other thing, I have one question about kind of car refinances. Say I cannot qualify a buyer and they have, they're on their own car and then they're jointly with their husband. And I need to get them off of that. How easy is it to refinance somebody off a car at that point?
So where I work, we're an indirect lender. So our relationship is with the car dealer, and the dealer is essentially the middleman. So we don't go direct to consumer. So we don't do any refinancing or anything like that. So I wouldn't be able to speak as intelligently on the refinancing process because we're not a direct to consumer lender.
They do allow that though, correct? They do allow for you to. Okay. And
yeah. So we have a good percentage of our loans that get paid off early are refinanced.
Okay. So yeah, that it does happen often, especially with rates move on those. So that is good to know for sure.
Definitely.
Anthony, how about you?
Yeah. So that credit question I was ready to ask that, but that's definitely something that is very interesting because if the lender or the dealership shopping them with 10 banks, then it's 10 inquiries, 10 separate hits.
Typically the dealer is going to kind of know where their customer fits. And so they kind of have their banks etched out as to what might be a best fit. So they're typically not shotgunning them to all of them. But if you've got a customer who's shopping around and doesn't mind filling out an application, they can run up the number of inquiries pretty quick.
Yeah, for sure. Now, do you see more financing or more leasing on your end?
We do financing. We do very little used car leasing because we typically deal with used cars.
Okay.
Is that rate higher on the used car payment? So the used car rate is higher than the new car rate?
Typically, yeah.
And that depends bank to bank. That's bank to
Bank
bank.
to bank. Yeah, but you got to factor in essentially added risk on the collateral if you're getting a 60,000 mile used car.
Okay.
It's slightly more risk than a used car.
That makes sense. I got one real question that a lot of my fans are asking here. What is the state of the used car market? What give me like the state of the union here on February 17th.
Well, as someone astutely brought up before the show, that new car prices just hit, I think, an average of $47,000, which is pretty insane. And the thing with buying a new car is that first year or two of depreciation is a killer. So if you can get a used car in like 2 or 3 years and 20 to 30,000 miles, you're at least not paying for that initial steep depreciation. So that's one benefit of getting a used car. Now, for the last year or so, used car prices were crazy high because of the demand. New cars weren't being supplied, so the used car market was in high demand. In the last couple of months, we've seen that drop drastically. I would say it's been January to January, year over year. The average price of a used car was probably down 15 to 20%. So the used car market is coming down.
That's crazy because all you hear about is how high the prices were for all cars, and you don't always hear about when they come back to reality. Same thing with like lumber. You heard about how much lumber went up, but you never hear how much lumber has come back to reality, kind of. That's crazy. I literally assumed that all prices were super high right now.
Yeah, and I'm currently having a problem with somebody. He has 2 car payments, and he wants to buy another house, get rid of one of his. He has a truck as well as a Challenger, and he just wants to get rid of the Challenger. Nothing wrong with his credit or anything. The dealership actually will not buy it back from him unless he's going to buy something new.
Yeah, a lot of people who bought a car in the last 12 to 15 months are unfortunately upside down. It's going to be tough to get out of those right now.
Good to know. Good to know.
Well, Michael, I appreciate it. Really, I mean, this just shows when you're going through the pre-approval process, this is kind of what we're doing as well. If you have a debt, if you can't get qualified for as much as you think you want to be able to get qualified up to, we can talk to you about this. We have a little bit of knowledge. It's why we talk to people like Mike to get more knowledge, to say, hey, go talk to your lender with your car to see if there's something to do there. Maybe you can get refinanced, extend your term, do something to make that payment lower to help you qualify. And as you can see with my shirt we have today, Saturdays are for the pre-approvals, boys. A lot of lenders like to close up shop, close the doors, and go to bed on the weekends. And I could say for the 3 loan officers here, we're definitely available for you on the weekend. So if you need any pre-approvals, if you have any questions, obviously reach out. But happy Friday. Stay warm. It's definitely a cold front coming on the East Coast this weekend. And have your guys a wonderful weekend.
Good weekend.
See you guys.
See you guys.